Why do most traders fail? They're stuck at the wrong level and don't even know it. You heard me right. The market isn't just about entries, it's about evolution. Today, I'm breaking down 7 levels of traders so you can spot yours in 60 seconds. Some of these levels, especially the early ones, you won't want to fall under if you're aiming for the big time. There's a mindset shift at level 5 that flips everything, so watch for it. If this saves you from even one bad trade, like the video and subscribe. We'll start with level 1, the gamblers. These are basically slot machine addicts on their computers, and can you blame them? I mean, who doesn't love a good slot machine win? They refresh their accounts every 30 seconds at 3 a.m., checking if their $67 position has suddenly made them a millionaire. Most quit in 2 weeks, but a rare few stumble into something bigger and accidentally break the entire market. In a nutshell, level 1 is mainly about luck chasing, not skill building. A good example is James Wynn, who turned $210 into $82 million. And because of his high-risk trading techniques, in the next session, he lost it all. It's like he went from owning the theater to selling tickets. But most level 1 traders aren't making millions. This could be your cousin who bought the Squid Game token at $300 because he saw it on Twitter. But he lost on a high return shot in the dark and now sells insurance. Life at level 1 is uncertain and chaotic, but not everyone starts there. Some people skip the gambling entirely and come in with a plan. Next up is level 2, the gurus. Unlike gamblers, gurus do no trading. They've made some decent money, but they couldn't scale. They hit a wall at $10,000 or maybe $20,000 and then realized something. Maybe it's easier to make money selling courses than actually trading. So they stopped being traders and became gurus. They start selling dreams through their content, flaunt their nomad lifestyle, Dubai penthouses and luxury cars, while their average viewer is stuck in a 9-to-5 or drowning in student debt. Their content creates obsession to achieve the Lambo lifestyle. The viewers don't watch for fun anymore. They follow religiously. And once they're hooked, the funnel begins. Tyler Riches follows this exact same playbook. He started off with free videos, giveaways, boot camps, and then sold his $4,000 course. And the crazier part is people actually bought it and got robbed. As per his students, the course provides zero value. And the strategies he teaches in his course are easily available on YouTube for free. And that's where level 3 comes in. These traders skip the noise and focus on one thing, actually learning. Looking at level 3, we get the learners. These guys have done their homework. They treat trading as a skill, not a get-rich-quick scheme. They've spent at least 6 months learning, from basics to advanced setups, enough to place winning trades and run a profitable account. They're patient learners who've tested multiple strategies with different setups. They're better than 70% of traders out there. But there's one thing that keeps them from reaching the next level: emotional control. Level 3 traders struggle to manage their emotions. They'll follow a winning strategy perfectly for 5 trades, then blow their weekly profit on one revenge trade because they got stopped out. They have the knowledge but lack the discipline. So they stay stuck in trial and error, learning a new strategy, testing it, then switching to another one, endlessly cycling through approaches. Although this trial and error takes them to a point where they can make $1,000 in profit, sometimes weekly, sometimes daily. Their win rate sits around 48%, far better than the level 2 manipulators who don't actually trade. But the problem is, these learners are paralyzed by imposter syndrome and self-doubt. They can guide on how to trade profitably, but for their own portfolio, they can't book much profit, which keeps them stuck in the learning phase. Breaking through requires discipline, which they haven't mastered yet. And that's exactly what separates level 3 from level 4, the side hustlers. Side hustler traders have figured out how to win. They just haven't committed to it. These are the people with full-time jobs who trade before work, during lunch breaks, and after the kids go to bed. Their portfolios make consistent profits, sometimes even doubling their monthly salary, but they won't quit their day job. It's not a skill issue, it's a fear issue. They execute well. They've developed emotional discipline. They've found strategies that work. But the thought of losing their steady paycheck in one bad trading week keeps them paralyzed. So they lurk between side hustle and career. Getting out of this level requires either more capital or a leap of faith that terrifies them. One great example of a side hustler is Nicholas Darvas, who lived this exact struggle. Professionally, he was a dancer touring nightclubs across Europe with his partner. Between performances, he'd squeeze in trades, watching charts in hotel rooms and calling brokers from payphones. He was making money, but not enough to quit dancing. Then one night in 1952, everything changed. After performing at a club, the owner couldn't pay him cash. Instead, he offered Darvas 6,000 shares of a mining company called Brilund. Darvas had no choice. He took the shares. For 2 months, he held them while touring, barely paying attention. Then one morning, he checked the price. The stock had exploded. His shares were worth $88,000 more than he made in an entire year of dancing. That single moment gave him something Level 4 traders desperately need: proof that the upside was real. This is where he shifted from this part-time gig to a full-time trader. Which brings me to Level 5, the full-timers. Level 5 is where trading becomes a real career. These traders wake up, trade their session, and log off, and do whatever they want to do with their day. Takashi Kotagawa, aka BNF, is a perfect fit at this level. He started trading while working as a waiter in a Tokyo cafe. He used to read charts while serving guests and place trades after picking up the plates. One day in 2001, during the dot-com crash, he made a single trade shorting overvalued tech stocks. That one trade made him 3 times the money of his annual salary. Unlike Level 4 traders, he didn't hesitate and quit his job the next day. It wasn't luck that kept him in the game. BNF built a system and tested it obsessively, backtesting years of data, forward testing with real money, refining until he could trust it completely. He built a safety net that Level 4 traders are too afraid to jump without. He had enough savings to survive even if trading failed. What separates Level 5 from everyone below is emotional detachment. For them, making money or losing money is the same thing. They've trained themselves to treat both as data points in a system. Mark Douglas, the author of Trading in the Zone, put it perfectly. A good trader feels great after a good trade, but a great trader feels nothing after a great trade. Level 5 traders live this. They control their emotions inside and outside the market. They're disciplined, consistent, and profitable. But here's the limitation. They're still 100% dependent on their own execution. If they stop trading, the income stops. They are the business, not the business owner. And that's exactly what changes at Level 6, where traders stop trading and start building empires. Level 6 is your fund managers. These are the people who become inspiration for newbie traders. At this level, they aren't just traders. They're CEOs of massive hedge funds, managing billions in assets. Their sheer discipline and understanding of market psychology takes them to this level, where they hire teams of analysts, quants, and portfolio managers. At this level, the income becomes semi-passive. Even if the market goes flat, management fees keep rolling in. They're no longer chained to the screens. The business works for them. We have people like Ken Griffin, John Paulson, and Ray Dalio. These people started from retail trading, then worked on Wall Street, made their own firms, and now they are either ruling the market or spending the rest of their lives watching football games. Their stories become case studies for generations to come. Their careers represent the absolute pinnacle of what's possible in trading. David Tepper started trading because he wanted to pay his tuition fees. Soon enough, he became a stable retail trader. But to reach the next level, he took an approach that most people would never think of. He bought beaten-down shares of almost dead companies. His strategy was simple. If the company survives even a little, the upside is huge. By doing that, he made huge profits in the 2008 financial crisis. Steve Cohen's edge is speed and knowledge. Started as a hotshot prop trader making millions daily for Gruntal. In 1992, he launched SAC Capital, growing it to $15 billion with aggressive long-short equity strategies. Despite insider trading scandals forcing a 2013 shutdown and fines, he rebuilt as Point72, now managing $30+ billion. Cohen turned his conviction-driven style into a talent factory, training hundreds of portfolio managers. He stepped back from daily trading years ago. Now the empire runs itself. And finally, we have Level 7 market makers. Level 7 traders have the legend status. They don't play for the market, they are the market. These are the people who either start from zero and get to this level with sheer hard work, or they start big. Some of these market movers start with millions of investment and turn it into multi-billions. At this level, it's no longer about strategies or charts. It's more about your understanding of the market and risk-taking abilities. There are people like Jim Simons, George Soros, and Paul Singer. Their one position forces central banks to react, algorithms to recalibrate, and governments to rewrite policies. These are the titans whose bets reshaped global economies, studied in textbooks, and feared on trading floors. And it's not that they started 5 years back. They are in the industry for more than 50 years. Take George Soros. He is the epitome at this level. He shorted the British pound in 1992. He made $1 billion in a single day and forced an entire country to change its monetary policy. When Jim Simon's company, Renaissance Technologies, enters a position, algorithms worldwide start analyzing why. His one single trade can alter currencies, force policy changes, or redefine industries. His company's profit return rate is 66%. And the crazy part is, he never hires investment traders in his companies. All the employees he's had over the past 30 years are scientists and mathematicians who hold PhDs just like him. While most of us will never reach this level, that doesn't mean it's impossible. The main takeaway is you don't beat markets by finding a magic signal. You level up behaviors until your process compounds. Be sure to like the video and subscribe for more deep dives on execution and key trading areas to learn, so you actually level up.